Hello and welcome to the CNBC-TV18's Mumbai Newsroom. I'm Sonal Bhutra. You're watching Mutual Fund Corner. Today, we'll do a deep dive in CRISIL Mutual Fund ranking reports. It's a very comprehensive report which they release every quarter. This time, we'll be talking about the June quarter report. Schemes with consistent performance have grabbed top spots. To understand the rating scenario, we have with us Jiju Vidyadharan, Senior Director of Funds and Fixed Income at CRISIL Market Intelligence and Analytics. Jiju, thank you so much for joining us today on CNBC-TV18. And this is a very interesting report and we would like to understand it in detail. You basically rank different funds in different schemes. So let's start with that question itself. What is the idea, on what basis do you rank different funds under different categories and ranks as well?
Sure. So Sonal, unlike a lot of the ranking models, that we see in India as well as globally, the CRISIL ranking is slightly unique. And it is unique in the sense that we look at not just performance, but also portfolio-based parameters. And we look at parameters, which are relevant for a specific category. So for instance, when we look at equity, we look at returns, we look at volatility, which reflect, how the performance for the fund has been. But we also look at portfolio elements like liquidity, what is the sort of concentration, that the fund may have in terms of specific sectors, specific companies, and so on. Likewise, in case of fixed income, we look at the same set of attributes broadly, but the portfolio-based factors, we look at debt-specific factors, things like, are there sectors, which are risky in the portfolio? What is the sort of liquidity profile? What is the credit profile, for the underlying investments? And so on. So it is really a combination of performance-based factors as well as portfolio-based factors that go into the rankings that come out from CRISIL.
Okay, interesting. And we'll talk more about it. How do ranks move across in different quarters? But let's start with a scheme or a segment which has seen a lot of interest in this year itself, and that's the mid-cap space. Because there's been a lot of buzz and we've seen a lot of moves around as well. Recently, HDFC Mid-Cap Opportunities Funds moved to rank 1 versus rank 2. What went right this time? And did the constituents change? What made you move the ranking here?
Sure. So, in case of HDFC Mid-Cap Opportunities, what we really see is that the fund per se has a significantly lower portfolio turnover. So what that effectively means is that a lot of the stocks that form part of the portfolio are held for a much longer period of time. And that really reflects conviction on the part of the portfolio manager. And what we really see in the recent performance is that conviction has paid off. The conviction in terms of the sectoral calls, like for instance, investments into the public sector, the PSUs, that has really paid off in the last 9 months. And likewise, specific stocks that the portfolio manager has held on to for a significant period of time, that being more than 3 years, has contributed in terms of the performance. So the fund has really come up on top, primarily driven by the performance, which is a factor of both sectoral calls that have paid off, as well as specific investments into companies or scripts, which is really the security selection part, which has paid off for the fund.
Okay, that is interesting. And somebody who's been invested in this particular fund would, of course, be enjoying some returns as well. But let's talk about the other side, because we've seen quant mutual funds ranking going down from 1 to 2 in the mid-cap space. Can you explain what really happened here?
Yeah, so quant, interestingly, is a slightly different type of fund management, that we see. Here, it is really, if you ask me, an actively managed portfolio across all of the quant funds. And active meaning that, there is a much higher churn that you see in terms of the portfolio constituents. In addition, what we also note in case of quant, specifically on the mid-cap side, is in the recent past, they have had a much larger exposure to large cap stocks as compared to the industry average. And second, very negligible exposure to small caps, which is a sector or a segment, that has really done well in the recent past. Now, these two factors have really contributed to the fund falling a notch on the CRISIL rankings. But we would also like to say that, when we look at the rankings, both 1 and 2, which represent 30% of the total funds, that are being ranked, represent good performance. So while the fund has fallen, we still would believe that it's a good investment to have.
Okay, that is an important clarification, of course. But Jiju, when you look at rankings, right, how does a fund gain in ranking and how does it lose in ranking? What are the other parameters you would just decide while taking this decision?
Yeah. So, if I were to look at equities, for instance, one of the primary factors that drive the performance of an equity fund on the CRISIL ranking is really the NAV performance, both expressed in return terms as well as in standard deviation or volatility terms. Mostly what we see is, that is a contributing factor. However, if you actually have two funds, which are very similar in terms of performance, then a lot of the portfolio-based attributes, like, what is the concentration, that the portfolio may have. The one which is a concentrated portfolio will actually stand to lose some points versus the one, which is more diversified, has a better liquidity profile, and so on. So it is really a combination of multiple factors that drive the performance. Returns more dominant in case of equities, and portfolio attributes or risk more dominant in case of the fixed income categories.
Okay. You just mentioned that ranking 1 or 2 are largely similar. It's just a notch down if we compare the two funds in different categories. But ICICI Prudential Mid Cap Fund, there the ranking has gone down from 3 to 4. Do you think that really differs in terms of making a decision on the investor's part, something that investors should keep in mind while they invest in the mid cap space as well?
Yeah. So when we look at, the rankings in the context of usage, really, from an investment perspective, the way we would really like to see this is 1 and 2 are really the ranks which are to be considered, when you're looking at investment decisions. If a fund slips from 2 to 3, you watch. In case it continues at 3, then it is important for you to take a call on that fund. And if it goes further down, then that really does not at least form part of the investable universe, from an investor's perspective. So, I use ranking as an example, but even otherwise, when it comes to investments into mutual funds, more so the equity oriented categories, it is important to understand that while SIPs are important and consistent investing is also equally important, it is also important for you to keep a note on the performance track record for the fund. If it is slipping beyond a specific tolerance limit, then probably look at the allocation. So that's really what I would like to say in terms of equity allocations.
And that's very important to understand when someone is investing in categories like mid-cap and small caps, which do tend to be volatile at times and not consistent performers for a longer period of time as well. So let's talk about the small cap space, because June saw record high flows here. It has ebbed a little bit, but still small cap funds continue to do well when it comes to inflows. So what is working for Nippon and Korn small cap funds for their ranks to be number 1 for last 2 to 3 quarters?
Yeah. So Nippon, again, we spoke about the quant fund as well as the HDFC fund in terms of, the investment styles that they have been following. Nippon small cap, what we really see is this is a fund, which has investments into 180 stocks. And that, if you actually look at it, is quite a large set of stocks, even from the perspective of diversification. Industry average is about 78 stocks, within that specific category. However, even with 180 stocks, we see the turnover or the portfolio turnover being only about 20%, which effectively means that the manager has held on to a significant number of the companies into which investments have been made. Now, these bets have actually paid off, both in terms of the sectoral calls like say, for instance, investments into capital goods, investments into auto, that has really paid off, as well as, the stock calls, that were taken by the portfolio manager that has paid off for the Nippon fund.
Okay.
And this, yeah.
So, actually, when I talk about Nippon and Quant, they have retained their ranking in terms of number one ranking. But a lot of funds have seen improvement in rankings when it comes to small cap funds. What is working for them? ICICI Prudential Small Cap from rank 3 to rank 2, DSME Small Cap Fund from rank 4 to rank 3. And the list suggests that there have been many upgrades. What do you think is working for the funds when it comes to the small cap space?
Yeah. So small cap, what is also very interesting is if you actually look at the index performance, and if you were to use the Nifty small cap 250 as an example, the return for that index has been about 38%. And if you were to compare that with the number for the Nifty 50, which represents large caps, that is about 24%. So there's a significant outperformance that you see, even in terms of the market representative indices. Now, funds have actually outperformed the indices significantly. 15 out of the 21 funds that we have ranked actually outperformed the indices as well. And what has worked for these funds? It's really, their bets in terms of specific companies, the stocks, that they took vis-a-vis the index. Likewise, the sectoral calls. So both of these have really contributed to funds outperforming the indices, and also reflects in the rankings for quite a few of the funds, which actually got their calls right, moving up on the CRISIL rankings.
Okay, so that's an interesting take and important to understand as well, because there are so many categories, there are so many funds and so many schemes as well. So the ranking really helps from experts to understand which would be the right fund to pick when you want to enter a particular cycle or a particular category as well. Jiju, it's an interesting chat, but we'll have to slip into a quick break. On the other side, we'll continue this discussion. Welcome back to MF Corner. We still have with us Jiju Vidyadharan of CRISIL. We are talking all about mutual funds rating for the June quarter, and they talk about all the schemes, be it large caps, mid caps, small caps, flexi caps, but today we're discussing some of them. And the next one on our radar is ELSS schemes, because there have been a change in the rankings there as well. So Jiju, what works in rankings for ELSS funds? Do you see a lot of movement in rankings here? Is this still a hot category post the change that we saw in tax regime?
Yeah, so ELSS, is a category which typically sees asset flows happening, towards the latter part of the year, when people are filing their taxes. While there's a lot of talk around, the new tax regime, we don't really see a change as yet in terms of flows. So the category has continued to see the same sort of flows as it did the previous year. Probably, once you actually have the new tax regime completely taking over, probably, you may see this category seeing some stress, at least, from a flows perspective. So that is really in terms of the flows. In terms of the performance characteristics or, trends that we see, per se, ELSS, is a flexi cap sort of a space. And we see that across all of the funds. Largely about 60 to 80% allocation to large cap stocks, and the residual really, deployed between small and mid caps. Trend that we see in the recent past in terms of performance is the funds which have had a higher allocation to small caps in comparison to large caps. They are the ones which have done well, which is in line with the broader trends that we have seen in terms of the industry performance between large caps and small caps. So we actually see that also in case of the ELSS category.
Okay, interesting. The other category that has done phenomenally well is the banking space in the last year across the board. So when we talk about rankings as per CRISIL, DSP has moved up a notch. What really worked for them to come in higher in terms of ranking and get that number one spot?
Yeah. So in case of the DSP banking and PSU debt fund, what has really worked for them is the portfolio-based attributes, and I spoke about how in case of fixed income especially, the portfolio attributes such as, the exposure that the portfolio may have to sensitive sectors, the credit profile, the liquidity of the underlying portfolio, the duration, that the portfolio manager is running in terms of interest rate risk. All these factors really play a critical role in terms of determining where the fund stands on the CRISIL rankings. And DSP has actually gained on the portfolio-based attributes.
Okay. Okay. So, when we are talking about this particular space, which is the banking space, and the debt side as well, which fund has mostly been an outperformer here? Is there a specific name, do you think, which has done well consistently? What do you think has worked for them?
Yeah, so one fund, so first and foremost, the banking and PSU debt funds, we have this segregation of debt funds on the basis of, excuse me, on the basis of, the portfolio duration. But in case of banking and PSU debt, there are no limits really in terms of the duration bands that can be taken by the portfolio managers. And what we really see
right.
is the
right. So yes, Jiju. So exactly, we've seen that in terms of the rankings that has come by in the banking and PSU debt side as well. We've seen improvement for DSP banking and PSU debt to come in at rank 1 versus rank 2 earlier, and we've also seen Franklin India and PSU debt fund move up a notch to rank 2 versus rank 3. But Jiju, you were saying something. Please continue.
Yeah. So what I was saying is that in case of the banking and PSU debt category, there is no real limit in terms of the duration band. And what we see is this is a category where portfolio managers actually take a higher duration when they believe that interest rates are likely to decline, because that then helps the fund in terms of its performance. And one fund that really stands out in this category is the ICICI Pru and Banking and PSU Debt Fund, which has been a significant outperformer in terms of performance. And one of the contributing factors, for that fund is really the exposure that it has to government securities, which is higher than the industry average. There is a limit, that is permissible for investments into government securities, and that has really paid off for the ICICI fund. So that is one fund, which is clearly an outperformer in this category.
Okay, all right. That's an interesting name. Thank you, Jiju, for specifying that to us. And I would have liked to discuss more themes and more funds with you, but we have completely run out of time. So thank you so much for joining us today. And with that, we'll take your leave on this edition of MF Corner. Stay tuned for Closing Bell to take you through the last hour of trade. Stay tuned to CNBC TV 18.